Welcome to this session. And from the charts, what we are seeing is the monthly time frame for DXY. So we're gonna start off the DXY, then we go to maybe euro, gold, and finally we finish with GBP. But from DXY, remember I've been calling this fair value area low liquidities that have been resting over here. And why so? Because we saw this area of fair value that was around this area being disrespected with this candle dropping deeper into that range, right? So into this range, if I can have it marked up. So from that high to this low, this box referred to a fair value area, because in this price action we have sellers and also we had buyers. So if indeed we were bearish, bullish, we don't really want to see price deliver deep into this fair value area. And if that happens, then the market will do the second thing of the two things that the market usually does, either offering fair value or seeking liquidities. Because we had already offered fair value within this range, then if the market dips or retraces deeper, then what we'll be seeking is liquidities, and liquidities resting below the fair value area. And you can see that had already been taken. And these current candle, to see, it has an approximate of 10 days before it closes, so we might be seeing maybe a possible rejection after the sweep of that major liquidity pool. But we can't just call that. We need more confirmation, since what you know is we have monthly fair value gaps resting below. So it's a matter of going on to the lower time frames and determining, are we likely to expect the retracements to confirm the lower week of this candle, or we can continue running lower. So from the monthly, what we can just identify is this is fair value area low as a major as a key level, and also we have this weekly low. But also we have swept through these previous low over there. So but that has already been swept, so there's no need for it. So what we have is this 3-month and the fair value area low that had already been swept also. Now there is a need to drop onto the weekly time frame, try to observe what is happening over there. From the weekly time frame, what we can see is we have this fair value area. And remember, whenever you're talking about a fair value area, assuming also, not even assuming, if we take this price action over here, what we see is we have a drop, buyers, and then sellers, right? So from the low to this high, this is a fair value area also. And why is it so? Because in this price action, what we can see is we have both buyers and sellers involved in that market. If indeed the market is bearish, the farthest we want to see is a retracement into the fair value area low, because from this level, from the low of this fair value gap to the low of this previous week's low, we had only sellers being involved. For the buyers to be involved, the farthest want to see is a sting into that fair value area low, and then a continuation going lower. So that's how I usually use the fair value area. And now, since we have that fair value gap confirmed, what I can do is only label the previous, these are fair value gap over there. But is it also likely that we might see price deliver into that fair value gap? It's possible, but to me, because we have already utilized the fair value area low, we want to see how price reacts to some areas, and then that will help me determine that indeed whether we are bearish or bullish. I'm seeing there's something marked up over here. Yep, lots of marked up. So there's a sell we took that ended up as a loser, which was a buy on EU. I guess it was on Wednesday. So let me get rid of these markups from the lower time frames. Oh yeah. Okay. Is those one. So from the weekly time frame, what you can see is price had already reacted onto that fair value area, and then we did have that rejection going lower. And since we have this target over here, so to me, I'm more of bearish because of the displacement of the fair value gaps that we are seeing and how heavy the market is going lower. But for me to engage heading this low, I need to identify a critical low, or a low of which if I see a price breaking through, then I can be able to jump in for a sell position. So currently, I don't know, the market has did close, and this was last week, so we haven't really opened. So what we want to see is this candle. I don't know, last week we traded that shallowing, let's see, of the daily time frame on Monday. Yeah, I think because it was Friday, we didn't really trade due to these Easter holidays. That's why you can see we are from Monday, right, from Thursday to Monday, right? Because Friday, remember, the market usually opens at around 18. So whenever what I mean by 18 p.m. New York time, that is around 6 p.m. New York time, whenever we are having holidays. That's why you can see a small candle, because it's opened at around 18 and then closed at midnight, 6 to midnight. That's why it's that small. And since a day usually closes at 6, at 6 p.m., meaning Friday had already been done, and now another day has happened from 6 to midnight. So they counted it, I think, as a Monday. That's why I'm wondering what the fuck am I saying that small candle there. So this possibly we can say another week has just started. But for me, if I want to be bearish, we might expect maybe a pullback into that fair value gap, of which we can expect the price to drop lower. But also, if we break through this previous week's low, which is my critical low, if we break through that with displacements, then I'm expecting a continuation going lower. So the previous week's low is also my critical low. So all right, my critical low also nice on there. So that's the level. If indeed I will be bearish, I want to see displacement below that so that I can engage in bearish prices. And as of the daily time frame, what you can see if I get rid of these markups, I wanted to see price deliver last week to this level and then drop off, but that actually didn't happen. And why was it so? That was so because I saw price did form this 1 hour fair value gap, of which the market stung into on Tuesday. Then on Thursday we dropped lower, consolidated on Thursday, and Friday we didn't really trade. So for this coming week, from the daily fair value gap, we are tanking. We have confirmed an upward candle inside a downtrend. So to me, it's an order block. So on Thursday we created an immediate rebalance. We rejected lower, and yeah, we've been consolidating, assuming in this price leg, which is clear from the 4 hour time frame. It's clear from the 4 hour time frame. We are really consolidating. So the daily IR that had already been utilized, you can see this IR is already utilized because the market overlapped this candle's low and also this candle's high. So nothing much there. But if we break also through this candle's low, through the Wednesday 16, the 4 p.m. candle, if we break through that, this 16th candle, then it can be my first critical low, because if indeed we are bullish, then there's no need for us to close through that. But the most key or high probability critical low will be this previous week's low. And since we are not far away from it, so I will be patient until I see this being taken. And if I see that being taken, then indeed I will try to look for bearish pricing. Excuse me. All right. So if we are bullish, then I'll wait for prices. If I see price breaking through these highs, that will maintain from that, and I have maybe my alerts there. If I see price breaking through that high to confirm maybe consecutive down close candles, meaning an order block, and we start displacing above that level, then what can I be targeting? Then I will be targeting this weekly fair value gap there, as well as all these previous days high, as well as this fair value area high, because inside this price leg, if we have this area whereby we have both buyers and sellers, if indeed the market displaces above that critical high, then we can expect to see this high being taken, and also see this weekly fair value gap being taken. And how have I determined my critical high? My critical high is we are reacting into 4 hour bearish fair value gaps. We are rejecting off that, and seemingly we are displacing lower. So around this high that we are seeing lots of sweeps of liquidities, right? Because this is the candles high that I used, because that was the first high that was swept. The market kept on consolidating around that point, and then we drop lower. So if indeed we break through that high, I will be trying to look for bullish prices going towards this PDH, maybe back to the fair value area low liquidities that we've talked about previously, and then finally towards the fair value gap of the weekly time frame. So something like this. So if the market will be bearish on a thing like this place, then go lower. So that's my first case scenario. And where do I want to get involved? I want to get involved inside fair value gaps around after these. So around these areas, that's where I want to get involved and move prices, engage in prices towards this low. And if indeed we are bullish, what I would like to see is a thing like this: price breaking through this high, maybe retesting, then and push higher. So, and an area I want to get involved is this price action over here, maybe get it around this area, push higher towards those highs. So that's what I can expect for this week DXY, and definitely the opposite is true for EU and GU. Now let's see what gold has. Let's see what gold has from the monthly time frame. The market is still bullish, really bullish. We have created the all-time highs, and still the market seems to be pushing, right? We have created another all-time highs as of now. So from the monthly, we don't have anything much other than noticing we created an immediate rebalance. We never rallied into these fair value gaps that we thought the market would rally to, then continue higher. Just created an immediate rebalance, rejected higher. And what I'm noticing is gold is usually respecting immediate rebalances other than any other pair that I trade. And so from the weekly, what we saw what we've seen this week did expand higher of these fair value gaps, pushed higher, confirmed another block around this area, and now we have traced higher and much higher. And what we have formed now is a weekly fair value gap from this candle's low to this, not candle's high to this candle's low. So we have the weekly fair value gap right there. And for this week, what we can see is is a displacement candle. And whenever we have a displacement candle, what tends to happen is we tend to leave this as a breakaway gap. A good example was assuming this fair value gap, right? This candle closed above the prior candle's high, and what we saw with the next week, we only created an immediate rebalance and pushed higher. Later on, that's when we came to trade into that fair value gap. So sometimes something like that can happen. Another example is this candle. We never traded into that, then continue higher. Maybe we took all those liquidities after this candle had closed above the second candle of the fair value gaps high. So price tended to push higher. Then later on, that's when we rejected. Another example over here, price, we had this, the same scenario that we have. Price is forming a small fair value gap. This candle has expanded above this level, so we might even just open, form a small wick, and then we continue higher, minus even creating an IR, right? So this is the perfect example of what is happening with this current wick. So we can expect a small wick, so we need to identify off the lower time frame what is it, is price likely to react off of. So from the weekly, though we have this weekly fair value gap and also we have the weekly IR, is it likely that we might see price deliver into these key levels, then a reverse? To me, it's a kind of low probability. It can happen, but to me, because of how the candle closed with strength, so we have the IR, because of how the candle closed with strength, then there is a possibility that we might not see these levels traded into. And what can happen is an example like I've shown you, is whereby this scenario has confirmed, then this next candle opens and then rallies to confirm another fair value gap, of which maybe the price could react off of. But since we don't know what can happen, we need to have that level. And whenever we have displacement candles like those, like these candle, the last week candle, is we have lower time frame fair value gaps that are being respected going higher. If we check on that, dropping onto the daily time frame, what we see is we had fair value gaps that have been formed, not even traded into, and that just the market has been displacing going higher. So that's what we are seeing, and this fair value gap is a kind of low probability to be traded into. Why? Because we can see this structure has already been broken, whereby the market closed above the swing high right there. So the weekly IR happens to be also a daily market structure shift, a fair value gap confirmed around that point in time. And what we have over here is a daily fair value gap, so from the low to the high. So the possible area, if indeed price drops lower, to what level can I expect to see the markets drop to, is this daily fair value gap. But also, is it possible that we see that, or the market can just do what it did last week over here, whereby yes, we confirmed a fair value gap with this consolidation candle, but the market never traded into, right? So is it likely that we may see price push into this level and then continue higher? We need also to predetermine that. And let me check on the lower time frames what we had. So I'll get rid of everything over here. We have a clean chart, so the all-time high is maintained, the fair value area lows, all right. So if we go back to the daily time frame, what we can see is we have that daily fair value gap, though we rejected off during the last phase of this trading week. So if we are bearish, if we are bullish, the first case scenario we can anticipate is a drop into this fair value gap and then we continue higher. But if the market closes above this Wednesday's high, so we have this Wednesday's high that had already been swept. So if price closes above that level and start displacing above it, minus even trading into this daily fair value gap, then to me, I'll be more bullish, and I wouldn't really anticipate to see that that fair value gap to be traded into, and that therefore this is my critical high. If price will break through that high, which happens to be that level, so ensure that at 8 at the top right, exactly. So if we see price deliver above that level, which is the Wednesday's high, then to me I will not look for bullish prices towards this low, but I will maybe look for continuations going higher. But if price will be dropping towards this level, which happens to be also 4-hour fair value gaps, I think I did label them over here. We have 4-hour fair value gaps there, as well as a daily fair value gap. So other than having that that one, let me have this one as also to have some clean price, or to observe clean price action, daily FEG. All right, so it should be visible all time frames, but I can go to the daily and ensure that it's visible from the daily and below. Nice one. So what we have over here is we have also this 4-hour fair value gap resting below, but is it likely that we might see price and deliver to that? That will be confirmed if seeing how price reacts to this level. So we cannot anticipate we can see price deliver to this low if we haven't seen how price will be reacting towards this level. So for me now in this price action, I'm just 50-50, and if I'm bullish, want to see price sweep through that critical high, then I'll engage in bullish prices. And if I want to see price deliver to this fair value daily fair value gap, as well as maybe the 4-hour fair value gap resting below here, as well as these liquidities, we have these liquidities that had already been swept, all right, at this level. So if the market is bullish, then there's no need for the market to start displacing below this low that had already been swept, which happens to be the Thursday's low. So for us, if we see any breakthrough this critical low, then to me I can now start to look for bearish prices towards that those fair value gaps that have shown of the daily and those of the 4-hour time frame. So we have that critical low. If the market breaks through that, then I will get involved going lower. And whenever I say a break, I want to see displacement with a fair value gap. So I want to see displacing lower, even sweeping this current candle low, the 4-hour current candle low, and seeing a pullback, then a thing like this. So that's what I can engage in, and whatever we'll engage in will be immediately we have confirmed this pullback towards that level, and then an expansion going lower. And also, if indeed we are bullish, what I want to see is price pushing off this level, push through that, then drop, then a breakthrough these highs with displacements. So then we can expect prices going higher, even to 3,400, right? So there's a possibility gold could be hitting 3,400, and that's what I'm waiting for until price breaks either between the range of the critical high and the critical low. If we don't break through that, then I'm just chilled waiting for prices to do either way, then I can engage. And if we can maybe drop deeper, for us to drop deeper into this weekly IR 4-hour fair value gap and later on to this weekly fair value gap, then what I will want to do is observe how price reacts to this daily fair value gap. If we start displacing also below that candle slow that had already rejected, if we start displacing below that, then somehow we can anticipate to see price deliver to the IR, the weekly IR. And if we reach this level and we start displacing below, remember now this is a fair value area because we have both buyers and sellers involved in the price action, and a fair value has already been offered. But in this price action we have only buyers, right? In this price action we have only buyers. But if sellers deliver towards this high and we see more sellers, then we're going to be seeking liquidities, and whenever we seek liquidities, we're going to be dropping onto this weekly fair value gap. So that's what I'm watching for, but I react to price according to how it reacts to those specific levels. And if that doesn't happen, then yeah, we just wait and chill. So GU has been printing nicely over last week, and want to have these levels deleted, the lower time frame levels. I'm still expecting GU to go higher, and immediately we broke through the critical high. That's when I wanted to look for buy positions, and you can see I have been in a buy position, but my broker, I don't know what happened. This position was closed, I don't know, due to the weekends, but yeah, I'm not currently in this position, but I'm expecting higher prices. So if I let visibility to be these time frames only, all right, get the 4-hour time frame. So this pound, and we had this previous week's high that the market had already traded above. And if you try to observe how it traded above, you can see it created a market structure shift because it did close above it, and we had that level being overlapped with a fair value gap. And so it was a key level whereby if indeed we are bullish, the farthest I would have wanted to see the market react was to that fair value area high and then continue higher. And so since we had that daily fair value gap, it was most high probability that we were to react off at this level. And what we did with this candle, dropped into that fair value gap, dropped into the fair value area high, and then we closed above this critical high. And immediately we closed above that critical high, then to me, I'm indeed bullish towards this BDH, and the long-term target for me is this target as well as this target. So this coming week, from the weekly time frame, is it likely that we might drop deeper for us to continue higher since we have the weekly IR around this area? I'm not really expecting to see that. Maybe we can expand then later on, reject to confirm a fair value gap, but for now, I'm not really expecting a retracement going lower. So we have that weekly IR there. Is it likely that we may drop deeper to that level? Let's identify. Oh my. So this is the weekly IR paired with all these daily fair value gaps that are yet to be traded into. Okay. All right, so that's the weekly IR. We have a daily fair value gap there, but we are reacting of daily fair value gaps and we are displacing above critical height. So to me, it's like less likely that we might see price deliver to that level and just continue higher to the target. And from what levels am I really expecting to see a continuation going higher? Since we have closed above the critical high right there, now I need to identify another context area of which we can just continue higher. And now we have a daily IR. We have a daily IR. Price can drop deeper into this level to also create the lower week of the weekly time frame. So daily IR over there, I think the critical high has already been utilized, so I'll just have it pulled further to the other side right there. So the daily IR can be my context area, and we've seen that previous days high being swept. Now the target can be shifted towards this high that has been created over here. Nice. So we have that as the previous day's high that has already been swept. But also, if we try to observe a price after sweeping that high, so if we have price from this level towards this level after sweeping the high, what you can see, it's a liquidity run because the candle closed above that level. We didn't only sweep that level, which is a key thing. So critical high broken through, which is a nice thing. And now what we're seeing is we have this level that also price broke through with a candle closing above it. So for me, I will look for bullish prices towards that high and this level. If so we see a candle closing above it and starting displacing with fair value gaps above it, then I'll try to look for a long positions for GU. So GU to me, from this PDH, if we start displacing with the 4-hour time frame going higher, forming fair value gaps, I want to engage towards this target. And yeah, and we had some clean price action over here whereby above this critical high, remember as price was dropping lower, we had this 4-hour fair value area, and I wanted to see, because prices was disrespecting this fair value area whereby we had both buyers and sellers involved in this price leg, the market disrespected that area and anticipated to see the fair value area being swept, and we swept that reacting over daily fair value gap. Then the market displaced nicely going higher, though it wasn't really nicely, it was really choppy, but the direction was there, and those liquidities were taken. And since we have now a liquidity run, we can expect to see fair value gaps. If I just see fair value gaps being formed with the fair value gaps, then I can just enter even a swing position with my stops below there, targeting even this the first target, then later on this second target. So that's what I have for EU GEO, and also same for EU. For EU, you can see we are reacting over daily fair value gap. We are creating daily order blocks. If we go to the daily time frame, I don't think I'll delete much from this time frame. So we have the daily IR that price didn't respect on Thursday, but on Friday you can see the market closed now above it, which is a good sign that indeed we are bullish. So if we see price displacing above the 4-hour critical high, then we can expect price to push through the PDH and also the previous week's high. And see, this scenario is a low resistance liquidity run. So EU and GU, I think EU will be the quickest one. EU, I think for me, will be the quickest one because in this area we don't have any resistance, so I'm expecting sharp and rapid movement. So if we try to observe the price action, we had a over key level, have this liquidity sweep inside the daily fair value gap, price pushed higher, confirmed the market structure shift. We have been consolidating around this moment in time, drop lower to the 4-hour fair value gap, then we're starting to push higher, and also we are displacing above this daily immediate rebalance, which is a nice thing. And see how price is respecting or doing that with fair value gaps. And if we close above the critical high, to me, I'm expecting prices. We have already, I think, if we start to displace nicely of that, which is possible, I think possible now, we can expect a thing like that going towards these levels. So that's what I will be watching for. So I'll have my alert at that level. So even those highs, yeah, that's where I can have my alert. If price displaces and triggers me in, then I can look for buy position, which to me will be really sharp, will be really fast, maybe even on maybe today on Sunday as the market will be opening, so we can expect to see that. But yeah, that's what I'm likely to expect. This is my critical high that has been broken currently, and yeah, off this high I can now try to look for buys. And if EU is buying, then DXY should be shorting, so I'll monitor how DXY reacts towards these levels that we said, and I'll have my alert at this level because these are low resistance liquidity run, so I want to have an alert there and also another alert at this level. If price breaks through those, if I'm alerted, then I can just go to GU and EU, try to look for the strongest pair and trade toward that level. So that's what I'm really expecting for these pairs. More gold, EU, GU. So I will mainly focus on these three pairs But remember, I don't trade EU and GEO at the same time. I only select the strongest pair, and whatever I get, I will trade that. So that's what I'm expecting. Hopefully you can learn from this, and if you have any query, just feel free to ask. Until next time, guys, be safe.